The most significant financial news locally came out of Australia yesterday. As was widely expected, the Reserve Bank of Australia decided to reduce its equivalent of the overnight cash rate. However, the scale of the reduction surprised most analysts. Effectively, the Reserve Bank of Australia reduced its overnight cash rate by around 0.5%, when effectively a 1/4% reduction was what was expected. The factors underpinning this reduction were effectively the feeling that the Australian economy is slowing down. Inflation data last week, in fact, showed that Australian inflation was falling, and similarly, house prices are also falling in Australia. On the other side of Pacific, some good news out of the US. Data around the manufacturing sector showed that the US manufacturing sector had increased its capacity by the largest amount in the last 10 months. However, the news out of the UK was completely the opposite, where in fact data in terms of manufacturing out of Great Britain showed that the manufacturing sector was falling. So what was the impact on markets? Certainly that manufacturing data gave the Dow a shot in the arm by being up more than 60 points. Interestingly enough, the Dow is now at levels last seen in 2007. In terms of European markets, most European markets were closed for the May Day holiday. Looking at currencies, the Kiwi was up against the Aussie, reflecting that Reserve Bank of Australia data. However, it was flat or down against most of its other major trading counterparts. The results of last night's global dairy trade auction continued the trend of the last few auctions, with prices continuing to fall. In fact, across all products, the prices were off around 2.4%. Leading the downward charge was anhydrous milk fat, off around 13.6%. In fact, the prices for AMF are now at levels last seen in late 2009. Looking at other products, surprisingly, cheddar was up around 3%. However, milk powders were also down, skim milk falling by around 4.6%. Looking across all products, the actual index is off now around 37% from where it was at the high tide mark in March 2011. Effectively what we're seeing is that extra supply coming through, both from New Zealand and from most other milk exporting countries.